So the first company we're going to be looking at is the One Invest, or the first unit trust rather, is the One Invest Sector Neutral Growth and Quality Index Tracker Fund. Yeah, that is a mouthful. Let's quickly go over the fund objective. The fund objective is of the One Invest Sector Neutral Growth and Quality Index Fund is to track the customized standard sector neutral growth quality index. So essentially it's saying Sanlam has an index. That's what they're trying to follow as closely as possible. We don't need to go over what does the fund invest in. You can read it for yourself. Important thing to look at the risk rating. It is an aggressively marketed fund. If 5 years, who should be invested, we don't really care. The distribution of income, so that's the dividends that it pays out. It is calculated and accrued daily, and it's declared and distributed semi-annually. So in June and in December, that's when you'll be getting your dividends. If we come on over to this side, just a bit more information about the managers. We don't really care. The size is 50 million, so it's relatively small compared to some of the other ones that we'll see shortly. It is South African equity. Regulation 28 is not compliant. That just means this can't be used for pension funds. The index we've spoken about, and yeah, the different classes just has to do with when they started or allowing people to do one or other things in these funds, and they tend to split them up. I don't really know why. Minimum investment lump sum of 5,000 or monthly of 500. If we come on over here to the advisor fees, and if I'm honest with you, I don't really understand the advisor fees, whether it means you need to pay the advisor fees on top of the total investment charges that you need to pay. But again, the total investment charge here is 1.38%, which from the last video we said anything that is below about 1.4 rather 1.5, that's pretty good. Anything above is pretty costly. So you're looking at about 1.38% for the total investment charge, which is okay. It's sort of in line with the market. If we look at the asset allocation, you'll see domestic equity, domestic property, and then cash. Most of it isn't domestic equity, and if we look at the actual industries that they're in, basic minerals is the main one, so you know that we'll be looking at a bunch of mines. And actually, if we come on over here to the top 10 holdings, the first thing actually isn't a mine, neither is the second. So even though it is the biggest sector that they're in, it might not hold the biggest holdings, but it's Naspers. We all should by now know what Naspers is. They own Prosus, which owns Tencent, which, yeah, that's the one part. But then Naspers in South Africa owns a bunch of other things like Media24, Takealot. There's just a whole lot of them. Richmond, that is the luxury company, the guys who own Cartier and all of that. I think it's Johan Rupert's business, or one of those guys. I think it's the Rupert gent. I'm not going to look at it, but yeah. Sibanye-Stillwater, this is one of my favorite platinum stocks that we have right now. If you do watch the Lobola Challenge, just click up there. Or is it up there? I think it's up there. Click up there, to watch the latest Lobola Challenge episode. Sibanye is really good. Impala Platinum. So there's those basic minerals we spoke about starting to come through. Goldfields, gold. Anglo Plat, which is Anglo Platinum, they obviously mine platinum. Capitec, we all know Capitec Bank. Kumba Iron Ore, which is again then an iron ore company. Vodacom, which is interesting, it's a slightly different allocation that they've got here. And there is Sanlam as the last thing, which we all know Sanlam is a insurer / investment and if we come on over here to the performance of the fund, or just to see how it's been doing over a period of time. This is actually quite confusing, so I'm actually not even going to read this part over here. I'm going to take it on over to the graph, which I think makes it a lot easier to read. The actual fund is in blue, the benchmark is in red, and unfortunately the actual fund being in blue is below the actual benchmark the whole time, which means this fund isn't performing exactly as the benchmark is. It's slightly worse than it, and yeah, that gap in between the thing, that's basically the difference, which means if you were able to get a hold of the benchmark or invest in the benchmark directly, you'd be better off than actually going into this, which again, for me, it's one of those things of why do we actually then invest in these things if that is the case. But anyway, that is that. If we come on over here to look at the actual dividends, the last dividends that they gave out is in June 2021. So that was actually just the end of the month that we've just passed, which was, I think this is 2 cents 30, which, yeah, you need to calculate how much a specific unit is. I saw the net asset value price there, but to actually go into it is going to be a bit of admin, so we keep it moving. But yeah, that's what they did in June. And then at the beginning of the year, they did a 8 cents, or not 8 cents, but less than 1 cent income distribution. So that is pretty cheap. That is the One Invest sector neutral growth and quality index tracker fund. They are currently sitting at number 1 because they have grown by 62.28% in the past year, which is pretty good, meaning that had you given them X amount of money in that time, you would have grown it by about 60%, which I think is a really good year-on-year return. Next, we've got the Coronation Smaller Companies Fund. If we look at the fund objectives, it says the fund aims to maximize long-term growth for investing in select group of companies, small to medium JSE listed companies rather. It seeks to outperform the combined JSE mid and small cap indices. Cool. Next thing we need to look at the risk profile. It's aggressive, 10 out of 10 for aggression, which is great. And you'll see they aren't too focused on income. It's mainly growth assets that they're looking at here, which is kind of a good thing to look at, and it's something that you should actually maybe start to track, excuse me, just for your own portfolio. You know, if you really want to beat the market, these are the type of things that you need to maybe not align your portfolio to exactly, but you can look to for ideas on what to do next. We look at the launch date 1997, so it's been going on. We spoke about the benchmark. It is purely South African equity. We're looking at the mid to small cap. Regulation 28 not compliant, meaning you can't use this for your pension, or your pension fund can't allocate this for you because you don't necessarily have a say over your pension fund. I know it sucks, but anyway. Income is semi-annually, so that's 2 times in March and September. Minimum investment, pretty standard, 5,000 or 500. The rest of those things don't really matter. If we come on over here, we've gone over the category. Actually, we've looked at most of these. The fund size is quite interesting, is 255 million. It's an okay size. It's bigger than the 50 million that we just looked at before, so it is actually bigger. If we come on over here to the expense ratio, they've got the total expense ratio of 1.23 and the total investment charge of 1.43, which I think is pretty much where we said we're looking at. That's sort of the benchmark, or where we need things to be. Anything above, too much. Anything below, great. If we come on over here to the fund performance, I love looking at these fund performance graphs because it really exposes how these guys are quite literally selling you these instruments, but according to this, they are falling below expectation, because if you see portfolios in dark blue, it's here at the bottom, and you look at benchmark, it is up there. One thing I will say though about this specific graph is that it's based on investing at the beginning of it relative to where it is now. If you had got it, you know, at some point in the middle somewhere, you can actually find that if you cut, you know, the start date and make it different, the graph does look slightly different. So if you know it started, and it actually started quite well, it was beating the index quite well, but yeah, eventually the index took over. But so if we look at the different categories that they're in here, most of it is 95% in equities. They'll mention, you know, preference shares, real estate, commodities, and so on and so forth. Great. The biggest industry that they're in here, from what I'm looking at, is financial, so that's probably like banks. So I'm expecting to see your Capitex, your First Rand. Then you've got consumer services right behind. Then there's industrials, consumer goods. So they've got a good mix of, you know, different industries that they are in. If we come on over here to the top 10 holdings, you'll see first thing is SPAR. SPAR, as we all know, is SPAR, the retail company. They are a retail company. They're a grocery store. You know, Spar, good for you. I wonder why they don't make those ads anymore. But anyway, that's Spar. Then you've got Mondi, which is the paper company. Distel, I don't actually know what Distel does, but there's Distel, there's Netbank. RMI Holdings, is it Mete Investments, Invicta Holdings, Advitech, which is the school, Wilson, is it Bailey, Overcon, and PSG Group. I think we all know PSG, they are an investment firm. I always find it funny how one company who's focused on investing invests in another company who's focused on investing. It's investorception. But anyway, if we come on over here to the performance, and I always like this part. If we look at the latest 1 year, the fund is up 62% and the benchmark is 41. So remember what I said to you earlier with this graph, to say that it may look like this now, but if you track it from a different point, the fund actually does beat the benchmark. This is a classic example. But then if you take it on over to the 3 year, it is slightly above. The funds did 9% over the last 3 years, whereas the benchmark did 9%. 5 years it did 8.2 versus the benchmark doing 5.7. 10 years is 9.4. So this is where it sort of starts to lag behind. So clearly, in the earlier days they were somewhat struggling, but yeah, I guess it's doing okay. I like as well that they've got the unannualized for the since launch. It just tells you the total amount. So had you put whatever amount of money when they launched, if you were tracking this fund, you would have grown by about 1,003%. But if you're doing the benchmark, it's almost like 2,002%. So it's actually quite good following the benchmark versus this. But in recent years, particularly the last year, it actually has done quite well. It's significantly beating out its benchmark, and even if you look at it year to date, it's 24.2% versus the 18. So this is quite good. If we look at the income distribution, you'll see the last declaration was in March. They paid it out in April, and I'm assuming that this is 333 cents because no one pays out this amount of rands per unit. Previous to that was September, which was 36 cents. And at least throughout March, so through the pandemic, they've been paying out. So I think that's quite good that they've maintained their dividends even throughout, the pandemic. But these are not necessarily income funds. They're not focused on these things. So, they are doing quite well. So, the Coronation Smaller Companies Fund, which has grown by about 61.4% over the last year, I think has been doing quite well. It's got a nice mix of companies that you wouldn't normally get involved in, and I think, like I said to you before, it's something that maybe you need to look, and if you want to be beating the market every year, look at funds like these, to sort of pick and choose different companies in there that you like or that could fit in your portfolio. Okay, so up next we've got the Coronation Resources Fund. By the name, you don't need to guess or try to think what this thing will mainly be invested in. But anyway, the fund aims to maximize long-term growth from investing in a select group of resource companies. It seeks to outperform the index of resource companies listed on the Johannesburg Stock Exchange over the longer term. Simple enough. We won't go over that. Risk profile, 10 out of 10 aggressive, and it's growth assets. So this one, if you're trying to beat the market, this is what you go for. Launch date, 1st of October 1999, right before Y2K. The benchmark, as we said, it's the JSE Resources Index. It's South African equity, specifically looking at the resources sector. Distribution comes semi-annually. Investment is the same, 5,000 lump sum or 500 a month debit order. If we keep scrolling down, we'll come on over here. Most of this information we've already looked at. Fund size is 1.46 billion. So you see it's quite a lot from that 50 million that we had before. And I think the previous one was 400 million. So this is quite a bump up from what it was before. And this one, I'm happy to say that the portfolio line is above the benchmark, meaning that this has outperformed its benchmark since the start, which is a really good thing. If we come on over here to the expense side, the total investment charge is 1.61%, which is slightly above the kind of benchmark that we're looking at, but not the benchmark gap, but yeah, the benchmark price actually, which is about 1.4, 1.5%. So this one is really not bad. Over 3 years, it does get to that level, but on a year-on-year basis, it is at 1.61%. Which, if you're paying for that premium, you should really be getting good returns on this, which so far, because it's in third place, tells you that it's not as good as the other two, but hey, we're still expecting good returns over a longer term, or at least over a longer period of time. I think the returns are better, so it kind of is worth that. Anyway, if we look at the sector it's equities, or that's the main thing, and there's a little bit of cash, and basic minerals, industrials, and energy. Those are the sectors that it focuses on when we say resources. Let's look at the top 10 holdings. Anglo American PLC. I really need to do an Anglo American video just to, sort of unpack everything inside of Anglo American, because it is a behemoth of a company. I think, for the month of August, I need to try and make sure I've got a video on Anglo American. We've got Glencore, we've got Royal Bafokeng, Northam, Exxaro, Impala Platts, Goldfields, Anglo Gold, Ashanti, Texta Tainer, I don't know, BHP, which is also a mining company. I'm not sure this Texta Taining what they are, but they probably are a mining company of sorts. So that is the total amount. 25% of this fund is Anglo American PLC, so it's a quarter, Anglo. So we look at the performance. We look at the 1 year. It's currently performing at 68% versus the 29, which is really good. If you ask me, that is whipping the benchmark. It's almost above by about 30%. If you look at from the last 3 years, 30% versus 20.9%, so it's really good. Last 5 years, 20.8 versus 20.06. So just the theme that's going on here is that this continues to outperform the benchmark. So I would definitely, this is something I'd be quite interested in. If we even look at it over the last 15 years, benchmark is 6%, this is done 12, so almost double if you're looking at it from the last 15 years. Year to date, it's up by about 21% versus the 12 of the benchmark. So this guy does really good versus its benchmark. I would say this fund manager is doing a lot better versus some of the other guys, because he actually is meeting and reaching his targets, which is beating the benchmark. Then if we just look at the income distributions, again, it's in cents. What came out in March was almost 1,000 cents, 1,500 almost cents is what came out, which is quite good. The previous one in September of 2020, or that came in October, was almost about 200 cents. So it's okay, it's fine, it's good, but the 1,000 I think is pretty good. Then if we come on over, I think that's pretty much all that we look at in this. We're not going to look at any of the other things, but this on our list has actually come up by about 58.40%. If you look at the numbers that I'm quoting versus what they've got here on the 1 year, you can find that this is without considering the expenses. The numbers I'm looking at do actually take into consideration the expense ratio of each of these things. Anyway, let's move on to the next company. So next thing we've got here is from Sanlam Investment Manager, and it's their resources fund. Surprise, surprise, resources are doing well again, and it's pretty much going to be the same as the last one, but let's go over it. The objective of the fund is to deliver capital growth and moderate income return over the medium to long term by investing in selected resources, commodity and energy shares in the South African and foreign markets. That's, I think, a good thing that it's in foreign markets. I guess the previous one was also in foreign markets because they had BHP, but anyway, this is a quality and diversified portfolio of leading resource, commodity and energy businesses constructed on the fundamental research basis. The fund generally displays more volatility than a general equity fund. This fund may invest 30% offshore. That's a plus for me, that it's investing offshore, even though I have kind of changed my opinions over time, but we'll get into that. Fund information, it is in the SA equity and resources. It's quite aggressive, so 10 out of 10 if we're using Coronation's thing. The benchmark is a peer group average. That means just other funds similar to it, I guess. The portfolio launch date is 1998. Fee class launch date, don't really know what that means. Minimum investment, Sanlam take it up a notch. It's 10,000 Rand for the lump sum or 500 Rand for monthly, which is quite interesting. Income comes end of June and end of the year, so literally it is yeah, at the beginning of the year and halfway through the year. That's the two times where you get your income. The fees, if we go over the fees, we look at the total expense ratio of 1.88%. So it is starting to be a bit of a premium compared to, you know, our benchmark of 1.4. So it is a bit more expensive, but over time, I'm sure it actually is worth it to be there. If we look at the top 10 holdings, it's Northam. That is a mine. I do believe it's a South African mine, but I do think they have some offshore stuff. We'll go over them one day sometime in the future. Royal Bafokeng Platinum, should know them. Sappy, that's the paper guys. Impala Platinum, we know Impala Platinum. Sasol, the darling of the Lobola Challenge. Glencore, I think they're coal mining if I'm not mistaken, but yeah, it's mining and mineral resources. BHP, we know, I don't think they have much South African assets actually, but I know that they're big in Australia. I think it actually is an Australian company, but they are listed on the JSE. Anglo's PPC. PPC has been doing really well recently. You know, there's a subreddit called JSE Bets that actually speaks about PPC, or a lot of people who are really pro PPC. We really need to look at PPC one day in the future. And Exaro, which is also a mining company. We look at the performance. The fund has done 91% versus the 55s over the last year, which is really good. I don't think it's been 91% if you ask me, but it's what their fun fact sheet says. Over 3 years, it's 37.88. The benchmark is 27.14, so it's beating it. Same thing for the 5 year, same thing for the 10 year. So this is actually really, really good. This is the annualized. Cumulative means if you're adding it all together, and over 10 years, it's grown by about 173, which is not good, but it is beating the benchmark. But the 5 year is kind of the sweet spot with the cumulative return. We're looking at the distribution. What's this? Is it 33 cents? Excuse me, that they came out on the 31st of May. And yeah, that's pretty much all that we have to look at here. There is a bit of a chart of the asset allocation, but really there's nothing that's going to tell us that we don't already know. This one is as well quite good, slightly different, you know, mix of companies versus the last one. Not too reliant on one company. So the last one, you know, Anglo was about 25%, at least here. The biggest holding, Northam, is about 10%. So you're not too exposed, you're not overexposed to a single company, but you do have a nice mix. And again, these are only the top 10 holdings. You can find that there's a bunch of other companies. Maybe, you know, if you guys want to see me drill down into one specific you know, unit trust, to go into each and every company that's there and sort of give my opinion, make a comment down below, just so, you know, I can know that you guys are into that kind of thing. Anyway, the next one that we're going to be looking at, and it's going to be the last one for this video, which is the Sanlam Investment Small Cap Fund. This is probably going to be pretty similar to the, you know, old mutual one we looked at before, but it says this is a specialist equity fund which seeks to achieve maximum capitalization appreciation by investing in companies with a small to mid market capitalizations who display potential to deliver above average earnings growth. The fund may invest a maximum of 30% offshore. Technically, these ones that say maximum of 30% offshore actually make me think that they're regulation 28 compliant, because I do think that that is the minimum that you can do offshore for reg 28. I stand to be corrected, but I think that's what that last part means, that it actually is reg 28 compliant. Then yeah, they go over the normal things. If we're coming over to the fund information, risk profile aggressive, the benchmark average South African equity, mid and small cap, okay. It was launched in 1997. Minimum investment, Sanlam seems to like this 10,500. The portfolio size is almost 400 million, which is, yeah, again, a bump up from what we had spoken about before. Biannual distributions, last one was in June, or not last one was on the 31st of December, which was 105 cents per unit. In June, they didn't give one out, so mwap. The days that they give, again, half year, beginning of the year or / end of the year, that's when they give it out. And the rest of this we don't really need to look at. We look at the fees, the expense ratio. It is slightly cheaper than the previous one. It's 1.79, but still quite a bit above from the 1.4 that we normally look for. So a bit of a premium. You would have to hope that over the years they really do beat their benchmark to justify that. We've got Renogen at the top. Renogen is another company I really need to go into. I've heard some good things about them. And the type of energy that they're producing. I don't remember off the top of my head what it is that they're doing, but I know it's something energy related, and I know that they're quite a big player in that space. So we are definitely going to come back to Renogen. We've got Northam. Is that Bluetel? Yeah, there's Bluetel, there's Adapt IT, there's Rubix, there's Sibanye Stillwater, there's Greenship, there's Curo, Telkom, and Wilson Bailey. If we look at the performance, excuse me, relative to the benchmark over a year, 77%. Again, very high number versus what I actually have for this. What I have it at is 49.54% over the past year, but maybe they're using different numbers to mine. Over 3 years, yeah, it's really not good. Single digits, 6.05 versus 4.06.